everyone, welcome to the Buddhi Academy. Today we'll start with Standard 12th Accountancy PYQ Solutions of Chapter 3, that is Retirement and Death of a Partner. So we'll start with the first question of 10 marks. So the first question here is Ankush, Govind and Sham were partners sharing profit and losses equally. So here the ratio is given as equal. Okay, 1:1:1. So whenever they give equally, you have to write down. You have to take it as 1:1:1. Their balance sheet as on 31st March 2022 was as under. So their balance sheet is given. So balance sheet as on 31st March 2022 are as follows. So here we are looking at the balance sheet first, the trial balance, whatever they have given in the question. So the first thing is whenever they give the trial balance, you have to write down the full thing. Like you have to prepare the accounts. First, you have to prepare revaluation account. Second, you have to prepare partner's capital. And third one is balance sheet of the new firm. Okay. Now, since this is retirement and death, one partner is retiring or one partner it becomes insolvent and all. So here whenever a partner retires, that time you have to find out the gain ratio. Okay, because since the one partner is retiring, the other partners are getting benefit out of it. They get benefit, they get their profit or losses, whatever it is being made by that particular partner. So here in the first question we have to check the liability side first. So liabilities side they have given as capital accounts of Ankush, Sham. Then they have given general reserve and creditors. Okay, so we'll look at the capital side first of the trial balance. So here in the question, capital accounts of Ankush is showing 2,10,000. So always the capital accounts goes in partner's capital account. Okay, it will go under this head, partner's capital account. So this is where it is going to go. 2,10,000 of Ankush. It means this much amount he has contributed into the business. Then Sham's capital is given as 1,20,000. So this is 1,20,000 capital of Sham. Then next, they have given general reserve. Now, with regards to general reserve we always distribute with the partners since it is their profit. Okay, it is a company's profit. So whenever there is a retirement or death of a partner, you always have to distribute it. Okay, you should distribute it in the old ratio. So always remember that general reserve we are going to distribute in this ratio, 1:1:1. Now here general reserve they have given as 87,000. So what you have to do is you have to distribute it to all the partners equally. Now here they have given it on liability side. So general reserve, it will come out this side. Whatever is getting debited in the trial balance, it will get credited. So that's why it came under this side, credit side of partner's capital account. And this one is debit side. So that rule you have to follow. Whatever is getting debited, you have to credit it. Okay, credit it to the next account. So general reserve now we have to distribute, that is see how we have distributed it equally because ratio is equal, right? So what we have done over here is 87,000 multiplied by 1 divided by 3. So you'll get 29,000. Okay, so all these things you have to distribute it to equal partners, all the partners equally. Then, with regards to creditor, uh, as we all know that creditor is a liability. Okay, so creditors you have to check for the adjustment first whether there is a additional information given for the creditors or not. Okay, so creditors obviously we know that since it is a liability, of course it will go in the balance sheet. So here I am taking that amount, but I have to check whether more additional information is given or not. Okay, so we'll come to the additional information later on. So as of now we are just looking at what are the information given in the trial balance. Then we'll move to the asset part. Building they have given as 2,50,000. So building, then next they have given furniture, debtors, provisions also they have made, then Govind's capital account and bank balance. So if you see in this question we have taken only the two partners capital account on credit side. With regards to the Govind's capital account, it will go on debit side because here they have given the capital account of Govind on the asset side. Okay, so here it will come. because here whatever is getting credited will debit, okay, on partner's capital account. Then now we'll move to the additional information. Okay. So building, we know that we are going to take it over here, 2,50,000, but we have to check whether any additional information is there or not. Then furniture as of now I am writing it over here, 75,000. Then we'll move to the additional information. Okay, so additional information says that on 1st July 2022, Govind retired from the firm. Okay, and Ankush and Sham agreed to share profit and losses in the ratio of 3:2. And here the goodwill of the firm is valued at 60,000. So currently the goodwill of the firm is 60,000. This is the total goodwill of the firm. Okay. Then, the first caution they have given is furniture to be appreciated by 10%. So, whenever they give the cautions like this, additional information like this with regards to any other asset or any other liability, you have to remember that additional information has got two effects. Okay. So, now furniture, we know in trial balance they have given furniture as 75,000, and now they are telling us the additional information that furniture is appreciated. It means that the value of the furniture has increased by 10%. So on 75,000 you have to find out 10%. So since the value of the asset is increasing, it will go on revaluation account. So here we take whatever, if the furniture is asset, right? So here the value of the asset is increasing, so it will go on credit side, and value of the asset whenever it decreases it will go on debit side. Okay. So buy furniture, since it is appreciating by 75,000, you have to multiply 75,000 multiplied by 10%, which will give you 7,500. Okay. Next, so first effect is over here. The second effect, since the value is appreciating, whatever is appreciated you just have to add it. So 75,000 plus 7,500, you will get 82,500. Okay. Then next, provision of bad and doubtful debts to be maintained 10% on debtors. Now, they have told us that on debtors you have to find out 10%. So this provision, extra provisions you have to make. So debtors are 95,000. If you find out 10% on this, you will get 9,500, okay, which will give you 85,500. So this is new PBDD. New provisions always you have to minus from the asset side of the balance sheet. And now if you see the trial balance, in the trial balance they have given that old provisions also they have given. Okay, old provision is how much they have given, it is 5,000. So here you have to do old minus new. Okay, that is 5,000 minus 9,500. So which will give you 4,500. Okay, so this how you got, you have to do old minus new. Old minus new you have to do. So old we were having 5,000 and new we have 9,500. So that's why you got 4,500 here. Okay. Then next. So side by side effect you have to put directly. So one we took it over here direct, and then 9,500 you just have to take the new provisions. So which will give you 85,500. Then we'll move to the next adjustment, which is an amount of 3,000 included in creditors is not likely to be claimed. Whenever the question is like this, it is not likely to be claimed, you have to minus it, because that 3,000 amount of creditors, they have not, the company had not get it. Okay, they didn't got that particular amount. So creditors in the old trial balance, in the caution it is showing creditors as 95,000. Now since in the additional information they have given creditors of 95, creditors of 3,000 are not likely to be claimed, what I am going to do is I am going to minus it. Okay, so this is the first effect. And then the second effect will come over here. Why it will come over here? Because creditors is a liability. Now since they are not likely to be claimed, liability has decreased over here on the credit side of revaluation account. Okay, revaluation account is nothing but here we only see the difference between the asset and the liabilities. Okay, so creditors, since it is decreasing, it will come over this side. Okay, so this is the second effect, and the first effect I took it over here. So we got 95 minus 3000, that is 92,000. Okay, then fourth adjustment what they have given is the retiring partner is to be given his share in the profit of the business from the date of last balance sheet to the date of retirement on the basis of profit of the year 21-22, which amounted to 48,000. Now they are saying over here is the now here who has retired, Govind has retired, and the Govind's share of profit till the last date of year it is amounted to 48,000. Now, so what I am going to do is I am going to take 48,000 multiplied by I am going to take the Govind's share. So Govind's share is how much over here? 1 upon 3 multiplied by I am going to take the months in order to find out profit and loss suspense account. Profit and loss suspense account. So I want how much is the Govind's share. So Govind has retired on 1st July. So we'll count from April. April, May, June. We are not going to take July because he retired on 1st. So we'll take only 3 months. So we'll take 3 upon 12. Okay. So which will give you 4,000. So 4,000 is my profit and loss suspense account. Okay. So this is his profit till the date. So since it is given in the additional information has got two effects. So those two effects, now this 4,000 I am going to give it to the retiring partner. Retiring partner is Govind. So since he is going to get, I am going to credit his account. Okay. So I am going to write down as by profit and loss suspense account under Govind's heading. Okay, 4,000. Then this is the first effect. Okay, second effect I am going to put it over here, profit and loss suspense account as 4,000. Okay, so this is what with regards to adjustment is. Then uh, also you have to check whatever is left in the trial balance. Now in trial balance, here bank balance is left. So bank balance they have given as 42,000. That also you have to mention over here. Bank balance, which will come under the asset in the balance sheet. Okay. Then so this is how you have to clear full thing with regards to the trial balance, and with regards to the additional information, goodwill is left. Goodwill of the firm is valued at 60,000. But before moving to the goodwill part, you should check that whether the old ratio and new ratio is given. Now in this question, old ratio and new ratio both are given. Here old ratio is 1 is to 1 is to 1 and the new ratio given is 3 is to 2. So whenever old ratio and new ratio is given, you have to find out the gain ratio. Okay. And the formula to calculate gain ratio is new share minus old share. New share minus old share. So you have to take the new share of the partner. You have to take the new share you have to take the new share of the partner and also you have to take the old share, and both you have to minus, and then that amount you have to multiply it by the this amount, goodwill amount. So you will get, so goodwill you have to distribute among the different partners, remaining partner. Now since Govind is retiring, no, you have to distribute it to the remaining partner. Ankush capital, which you'll get 16,000, and Sham's capital, which you'll get 4,000. Now this you have to take it over this side, debit side, and you have to show that Govind's from his side he is giving. So to Govind's capital account 16 and 4,000. Okay. Now before completing partner's capital account, you have to check revaluation account also. With regards to revaluation account, now everything we took furniture, we took creditors, PBDD also adjustment we did. So you have to add, so you will get 7,500 plus 3,000, 10,500. You have to check which side is heavier. Now heavier is this side, 10,500. So this you have to minus it from this lesser side 4,500, you will get 6,000. Okay, but whenever you are calculating the partner's capital account, this is the partner's share, how much each partner is going to get. So this you have to distribute in the old ratio. Okay, this you have to remember. This is very important, that whatever in revaluation account, whatever the balancing figure comes, that you have to distribute in the old ratio. And currently the old ratio is what? It's 1:1:1. Okay, so that you have to distribute over here. Once you have distributed this, that amount, now here we got 2,000, 2,000 and 6,000. How you are going to calculate this? 6,000 multiplied by 1 divided by 3. You will get 2,000 for Ankush, Govind and Sham. Since the ratios are equal, same amount will come. Okay. Then this amount, now this came on debit side, no? It means the loss. This you have to transfer it to the credit side. As I told, whatever is getting debited on one account should credit on the next account. So now we are transferring this 2,000 into the partner's capital account, that is by revaluation account. Okay, this is how we are going to put by revaluation. Why revaluation? Because we are transferring it from this account, no, revaluation account. That's why this name came. Okay, now this is the amount which we are going to distribute with all the three partners. Then after, this is the last step what you have to do over here. After doing this, again we are going to calculate the Sham's profit, Govind's profit, Ankush profit. So here if you add 1,20,000 plus 29,000 plus 2,000, you will get 1,51,000. Then again for Govind's you have to check 29 plus 16,000 plus 4,000, then plus 4,000 plus 2,000 will get 55,000. Then Ankush capital you have to add over here, 2,10,000 plus 29,000 plus 2,000 will get 2,41,000. But with whenever you are calculating, now that side was heavier, right? So that's why my balancing figure came under debit side. Okay, this is my balancing figure. Now whatever balancing figure I am going to get, I am going to transfer it to balance sheet here. Okay, this way I am going to transfer. So balance close down. Ankush we got as 2,25,000. This is the balancing figure. And for Sham we got as 1,47,000. Okay, but then, so this amount I am going to transfer it over here. I am not going to show the Govind's capital over here. Why? Because he has already retired from the business. So whenever I am preparing balance sheet of the new firm, Govind's name is not going to come. Okay. So here I am going to write down 2,25,000 and 1,47,000. Then after that, you have to check and tally both the liability and the asset side. So liabilities, I'm getting 4,64,000. Here also asset, I'm getting 4,64,000. It means your amount, if your both the side is correct, then it's, the sum is correct. Okay. So here, only thing you have to remember, you are going to transfer Ankush and Sham's capital in liability side of the balance sheet. Okay, because this is the remaining partner, no? So this you have to show. And one more thing, it is with regards to profit and loss suspense account, that also you have to take over here, because adjustment has got two effects. So now we'll move to the second question. And the second question is, Ramesh, Rupesh and Manoj are partners in a firm sharing profit and losses equally. So here the ratio is given as equal. One equal means you have to take as 1:1:1. Okay. Next, their balance sheet as on 31st March 2023 is as under. Now, first they have given us the trial balance and then the additional information is being provided by them. So, balance sheet as on 31st March 2023 is as liabilities amount, asset amount. So, we'll clear the liability side first. So, on liability side they have given Ramesh, Rupesh and Manoj capital. So, since it is on debit side, we are going to take on the credit side. So, by balance brought down, Ramesh, Rupesh and Manoj. Capital is 1,20,000 of Ramesh then 90,000 of Rupesh and 60,000 is of Manoj. Okay, so here we are clear with regards to where to put the capitals. Next is with regards to outstanding rent. Outstanding is a liability, so obviously it will go on the balance sheet part. Okay, so here it will go outstanding rent, which is amounted to 30,000. So outstanding rent we took over here. So before preparing this, you have to prepare all the three accounts side by side. Okay, so first revaluation, second partner's capital, and third one is balance sheet of the new firm. Next, general reserve. General reserve obviously we distribute in the old ratio. Now here the old ratio is 1:1:1, and general reserve they have given as 90,000. So general reserve you have to distribute in the equal ratio. So how you are going to distribute 90,000 multiplied by 1 divided by 3. Since the ratio is equal of all the three partners, it will be like this 30, 30 and 30. Then now we'll move to the asset part. But before moving to the asset part, we'll check whether any new adjustment are given or not. Okay, so we'll move to the adjustment part now. So adjustment says that on 1st July 2023, Rumesh retired from the firm. So Rupesh retired from the firm. Rupesh is a partner who is retiring. Okay, he retired from the firm. Now, Ramesh and Manoj agreed to share profit and losses in the ratio of 3:2. Now, since Rupesh is retiring, the new ratio which Ramesh and Manoj will share is 3:2. So we have new ratio in the sum and we also have old ratio in the sum. Okay. Now goodwill of the firm is valued at rupees 60,000. So first part they have given goodwill, the total goodwill of the firm they have given, which is 60,000. So with regards to goodwill, you have to find out goodwill and you have to distribute that goodwill to the remaining partners, that is Ramesh and Manoj is the remaining partner. So here now, you have to check whether old ratio or new ratio is given or not. So, in this sum, both the ratios are given. So, you have to find out the gain ratio. Okay. The first step is you have to calculate goodwill. Now, here goodwill given as 60,000 multiplied by the retiring partner share. Now, here the retiring partner share is 1 upon 3. That whatever the amount you will get over here. Now, here I am getting it as 20,000. This 20,000 you have to distribute with the gain ratio. Now gain ratio formula is new ratio minus old ratio. So you have to find out new share minus old share of the partner of the remaining partner. Okay, and whatever you are getting that you have to put, and now here I am getting it as 16,000 and 4,000 after the calculation. Okay, so this is what I am getting. So that's why I took the goodwill under Rupesh capital, but we are distributing it to the partner. So here I took Ramesh capital 16,000 and Manoj capital 4. Then once you put it over here, you have to put under this head Rupesh capital. Rupesh is giving, no? So 16 and 4,000. Okay, so this is with regards to the goodwill part. Now, the next is furniture appreciated by 10% and stock to be shown as 46,100. So, they are saying that furniture, the value of the furniture has appreciated, and whatever the asset value has appreciated, we show it on the credit side of revaluation account. Now, the furniture which is given in the trial balance, the amount is 60,000. So, on 60,000, you have to find out 10%, which will give you 6,000. Okay, this since it is appreciated by 6,000, I'm going to show it under the revaluation account. Okay, on the credit side. Then since it is appreciated, you have to add it over here. So 60,000 plus 6, you will get 66,000, and then furniture, whatever the amount is appreciated, you have to show it over here in the revaluation account. So this is the second adjustment, second effect. Then they have told us about the stock to be shown as 46,100. It means the stock value is 46,100. It means earlier in the trial balance, they have given us as 50,000. So 50,000 minus 46,100 and it is depreciated because earlier the stock amount was more and now they are telling us to show it as 46,100. It means the value of the stock has depreciated. Okay, it has decreased. So 3,900 I am going to show it over here on debit side. So here I am showing it as the value of the stock has decreased. Next, provision for bad and doubtful debts to be maintained at 10% on debtors. So on debtors, you have to find out 10%. So debtors, the actual amount of debtors is 90,000. So on 90,000, you have to find out 10%, which will give you 9,000. Okay. So this is my new PPTD, 9,000. And similarly, you have to check whether old PPTD is given in the sum or not. So here it is given. So you have to, old PPTD in the sum they are given as 6,000. So 6,000 minus the new PPTD which you got, that is 9,000. This will give you 3,000. So what I am doing is old minus new. So here for provision on debtors, you have to do it like this. Then, and the second new PPTD only you have to minus it. Okay. Next adjustment is with regards to profit and loss suspense account. The retiring partner is to be given his share in the profit of the business from the date of last balance sheet to the date of retirement on the basis of profit for the year 21-22, which is amounted to 36,000. So whenever the question is like this, you have to find out profit and loss suspense account. Okay, so here I have written profit and loss suspense account. Now the amount which I am getting over here is 3,000. Now whenever you get whenever the adjustment is like this, that is the estimated profit if you want to find out. Now here they have given it as 36,000. So what you have to do is 36,000 multiplied by the retiring partner share multiplied by the month. Now month he is retired on 1st July. So I am going to count from April, May, June, 3 months. 3 divided by 12. So you will get 3,000 over here. Okay. So these are the different adjustment. Now the first effect will go over here in partners capital account under the head Rupesh because Rupesh is retiring, and the second effect of this will go under balance sheet, that is the asset part. Okay, as 3,000 by profit and loss suspense account. Now whatever is left that you have to check. Now in this question, bank balance we took as 26,000. This is according to what they have given in the question. Then we saw about the building, furniture, stock, debtors, profit and loss suspense. Then after doing all these things, after doing all the adjustment, you have to check which side is heavier. You have to move to the revaluation account. So with regards to revaluation account, debit side is heavier. So 3,900 plus 3,000, which will give you 6,900. So now this side is less, right? This side is less. So what I am going to do is I am going to find out the difference. So difference I am getting over here is 900. So this 900 you have to distribute it with the ratio. Ratio is 1:1:1. So if you see here I am getting the more balance, which is 6,900. So and this side is less, which is 6,000. So I have to minus this now, 6,900 minus 6,000, which will give me 900. Okay, this is the amount which I am getting. Now this 900 you have to distribute it with the old ratio. Always we distribute that with the old ratio. Now here old ratio is 1:1:1. So with that you have to distribute. Okay, so which will give you 300, 300 and 300. Now from this whatever the answer you are getting, that you have to transfer it to the second account, that is partners capital account. Now, since this is on the credit side, you have to put it under the debit side, okay, according to the rule as I said earlier. Now, debit side you have to put, but under what head you are going to put? As you are going to put it under revaluation account, because you are transferring it from this account, right? So that's why the revaluation account name will come. So under revaluation account, I'm writing 300, 300 and 300 for all the partners. Now, after that, you have to tally all the sides, and whatever, now see, I'm getting Rupesh loan account as a balancing figure as 1,42,700. So since Rupesh is retiring, his balancing figure you have to show it separately, okay? Because he is not going to continue with the firm. So that's why his balancing figure you always have to show it separately. And now the next part, it will go over here as Rupesh loan account, because this amount company is going to pay him. Okay, that's why I'm going to show this separately as 1,42,700. Okay, then with regards to the remaining partner, the remaining partners are Ramesh and Manoj. So remaining partner capital account, you have to show it as by balance close down. This is the balancing figure which you are getting. So Ramesh balancing figure is 1,33,700, which you have to show it over here, and Manoj capital account is showing 85,700. So this you can put under this head, because this is the balance sheet of the new firm, and then you have to tally the both the side, which will give you 3,92,100. Okay. So this is what you have to remember with regards to this type of sum. So we'll start with the third question, that is A, B and C are partners in a firm sharing profit and losses in the ratio of 5 is to 3 is to 2. Now their old ratio is given as 5 is to 3 is to 2. Okay. Then their balance sheet as on 31st March 2023 was as under. Now here they have given us the trial balance, and we'll first check the liability side. Capital, capital account of all the three partners, that is A, B and C. So obviously we know that we take capital on the credit side of partners capital account. So A, B and C's capital, A's capital is 1,20,000, then B's capital given here is 90,000 and C's capital is 80,000. Okay, so capital as it is you have to write down on the partner's capital account. Then profit and loss account. With regards to profit and loss account, we always distribute like how we have distributed it for general reserve. So profit and loss account we have to distribute in the old ratio of the partners. So here the old ratio is given as 5 is to 3 is to 2. So profit and loss account here, the total amount which is given is 25,000. So that 25,000 you have to multiply it with the ratio of the partner. Okay, here now A, B and C. So how you are going to do is 25,000 multiplied by 5 divided by 10. This is for A. Okay, similarly you are going to do it for B and C. So you will get the answer 12,500 for A after doing this. Next is creditors. So creditors I am going to write down in the liability part, because liability side, because creditor it falls under that category, liability. Creditor is a liability. So here I am going to do creditors 78,500. Next, before moving to the asset part, we'll check what are the additional information given. So, on 1st October 2023, partner C died. Okay, so here he is dead. Now, and it was agreed between the legal representative of partner C and the remaining partner that goodwill of the firm is valued at 60,000. So the total goodwill of the firm they have given as 60,000. So goodwill is 60,000. So this 60,000 you have to distribute among the remaining partners. Okay, remaining partners. So how you are going to do? You have to take the death partner share. So I am going to take the death partner share. So 60,000 multiply it by death partner share is how much? 2. So 2 divided by 10, which I am going to get 60,000 multiplied by 2 divided by 10, 12,000. And this 12,000 I am going to distribute with the ratio of the remaining partner. Okay, so So 12,000 multiplied by 5 divided by 8. So now the remaining partner here is A and B. So what I am going to do is A and B, and what is the old ratio? Now C is dead. Okay, so the remaining partners are A and B. So I am going to take this remaining ratio, that is 5:3. So 12,000 multiplied by 5 divided by 8, and 12,000 multiplied by 3 divided by 8, which I am going to get 7,500 for A and 4,000 for B. So that this amount I am going to write down over here by A's capital and by B's capital account. Okay, so by A's capital I got 7,500, B's capital I got 4,000, and this amount I am going to write down again on the debit side as they are getting it from C. So C's capital account here on both the partners, remaining partners head. Okay. Next adjustment is building to be appreciated 210% of the book value. Now the building's book value is 2 lakh and now it is appreciating at 110%. Since it is appreciating, I am going to add, that is 20,000. So 2 lakh plus 20,000, I got 2 lakh 20,000. Next, since the value is appreciated of the particular asset, I am going to write down on the credit side of the revaluation account, that is 20,000. Okay. Next, they have given machinery to be depreciated by 20%. Since it is a depreciation is nothing but it is the value of the asset goes down due to wear and tear. Okay. Now here machinery's book value is 30,000. On 30,000 you have to find out 20%. So you'll get 4,500. So 30 minus 4,500, 25,500. Next, since the value of the machinery is going down, you have to write down it on debit side of the revaluation account. Okay. As per the rule, whatever asset, the value of the asset, if it decreases, then we show it on the debit side of revaluation account. So 3,900. Then investment to be taken over by, okay, next is provision for doubtful debt to be increased by 5% on debtors. So the provision is increased by 5% on debtors. So on debtors you have to find out 5%. Debtors here given as 68,000. So 68,000 on 5% you have to find out on debtors. Okay. Now we'll move to the trial balance of the balance sheet. That is, building they have given as 20,000. Machinery they have given as 30,000. So machinery I wrote it as 30,000. Then computer it is 26,000. So computer I am going directly I am going to write down as there are no adjustment being made. Then stock here they have given as 40,000 and they had told adjustment for stock to be increased. So since the value of the stock has increased, I took it on the credit side. Then debtors, they have mentioned debtors, the book value which they have given for the debtors is 68,000. Okay. Then cash in hand, you have to write down it as it is. Cash in hand, that is 29,500. So cash in hand, basically it goes on the asset side of the balance sheet. So cash in hand, here we have 29,500. Then, so after doing this, you have to calculate all, that is from revaluation account, you have to check first. That is, you have to take this side first and you have to check which side is heavier. Also here they have given profit and loss suspense account. Okay, profit and loss suspense account, if you want to calculate that, how you are going to calculate, you have to take the profit of the particular partner, multiply it by the retiring or death partner share. For retirement and death, it is same. Okay, so you have to take the profit of the death partner over here. So C's profit you have to take, multiply that with the ratio of the death partner. So ratio we are going to take as this ratio and multiply it by month. Okay, now here he was died on 1st October 2023. So from April to September you have to calculate. April, May, June, July, August, September. Okay, 6 months you have to take because he exact date is given as 1st October, so the full 1st October won't come over here. So till 6 months you have to take, and for the goodwill calculation you have to do it over here like this. So this is with regards to profit and loss suspense account. This is the first effect. Second effect of P&L suspense account will go over here on the asset side of the balance sheet. Then after that you have to calculate, and whatever the profit you are getting, that will come on the next account, that is partners capital account, as by revaluation account. Okay, because you are transferring it from revaluation account, this one. Then again you have to add and you have to check which side is heavier. So here, since the C has died already, now whatever the profit is left of C, you have to give it to his executors. C executor you have to pay. Okay, so C's executor, we are going to pay this much of amount, that is this amount, and that amount you have to transfer it to the balance sheet, but you have to show it separately. You cannot mix the amount with the capital of the remaining partner. Okay, that's because here C has already died, and the C's executors, the legal representative, we are going to pay the amount to that particular person. Okay, and the this balance, whatever balance, now remaining partner balance of A and B which is remaining, this is the balancing figure that you can show as capital, that you have to show as a capital over here, as A and B's capital together, but you cannot mix the capital of or the profit of the C's as in the capital of the remaining partner, because he has already died, and the remaining profit we are going to pay it to the executor. So here it is going to come. Okay, so after that, doing we also see we saw building, then machinery, debtors, stock, computer, cash in hand, profit and loss suspense account in this balance sheet. And with regards to capital, you have to keep in mind such things, that is with regards to executors and the capital, and the balancing figure with regards to partners capital account. Here also you cannot mix the executors loan account with the balancing figure, otherwise it will be wrong. Okay, and also with regards to goodwill calculation, you have to show the goodwill calculation on the two side, debit and credit. So now let's move to question number 4, that is Victor, Nelson and Wilson are partner in a firm sharing profit and losses in the ratio of 5:4:3. Their balance sheet as on 31st March 2023 was as under. Now first, we'll check the trial balance. So, liabilities, under the head liability, they have given capital of Victor, Nelson and Wilson. So, as we know that we take capital on this side, the capital is 1 lakh, 80,000 and 60,000. Then next, bills payable, creditors and general fund. Now in this question they have told us only to prepare revaluation account, partners capital and executors loan account. They have not told us to prepare balance sheet. So payable, obviously it is not going to come, because balance sheet we are not going to prepare. So we, instead of balance sheet, they told us to prepare executors loan account. Okay. So bills payable we are going to skip over here. Then creditors also we are going to skip. Then general fund, the general reserve we have to distribute. General reserve they have given as 24,000. So this general reserve we are going to distribute with their ratio, and the ratio is 5:4:3. Okay, 5:4:3. This is their ratio of Victor, Nelson and Wilson. Next. Next, we'll move to the asset part. Asset, they have given goodwill. Goodwill, then they have given land and building, machinery, stock, debtors, and cash in hand. With regards to land and building, we have to check whether any adjustment is given or not. So, we'll check for the additional information. So on 1st July 2023, partner Wilson died, and it was agreed between the legal representatives of partner Wilson and the remaining partners that goodwill of the firm is fixed at rupees 36,000. So goodwill they have given as 36,000. Goodwill of the firm is 36. Okay, so goodwill of the firm is 36,000. Then land and building to be appreciated by 15%. So now we have to check, since there is a appreciation word mentioned, we have to check the original value of land and building. So land and building they have given us 1,60,000. So on 1,60,000 you have to find out 15%, which will give you 24,000. That you have to write down over here. Okay. So since the value is appreciating, it will go on a revaluation account, credit side of revaluation account. So this side is revaluation account, credit side. Since the value of the asset is increasing, it will go over here, and it will whatever the asset is depreciated, that will go on this side, debit side. Okay. So now we saw the land and building part. Since it is appreciated, it is going on this side, credit side. Next, machinery to be depreciated by 20%. We'll see the original value of the machinery, which is 65,000. So on that you have to find out 20%. Okay, they have given us 20%. So on the machinery you have to find out 20%. You will get 13,000. Since the value is going down, you have to take on debit side of revaluation account. Then stock to be revalued at 36,000. Directly they have given stock is revalued at 36,000. So if such is the situation, then you have to check stock book value. So book value is 27,000 and minus 36, so you will get 9,000. So it means that now it is increasing the stock value. Now in the additional information it has increased. So that's why you have to take on credit side. Next, creditors valued at rupees 32,500. Then provision for bad and doubtful debt to be increased by 9,000. In the trial balance, they have given provisions as 6,000, and now it is increased by 3,000. Okay, so 3,000 will come over here. Since the liabilities are increasing, you have to show on debit side of revaluation account. Next, Welson's share of profit up to the date of his death is to be calculated on the basis of profit of the previous year, which amounted to 48,000. So now you have to calculate profit and loss suspense account. So with regards to profit and loss suspense account, how we calculate this? We are going to take 48,000, which is the Welson's share of profit, multiplied by the Welson's ratio. His ratio is 3. 3 upon 12 multiplied by the months. Okay, so here we have to calculate the month. Since he died on 1st July 2023, I am taking months of 3 months. 3 divided by 12, which will give you 3,000. Okay, so the answer is 3,000. So profit and loss suspense account, I am going to put it, basically we put under two heads. First one, it goes on partners capital account. Next, if we show it on balance sheet asset side. But since they told us not to prepare balance sheet, they told us only to prepare executors loan account. We are only going to show the only one effect. Okay, by profit and loss suspense account 3,000. Okay, and here's the method to calculate that profit and loss suspense account. So this is the profit and loss suspense account. Next is Welson's legal representative is to be paid 13,500 in cash. Okay, so now Welson is right? So his representative, legal representative is to be paid 13,500 in cash. So since it is, and the balance transferred to executor's loan account, and you have to prepare loan account in 3 equal annual installments with interest of 10% per annum. So since Welson's representative, we have to pay him in cash. I am going to show it under the debit side of partner's capital account as to cash or bank account, because they have mentioned over here in cash. So it's better if you write down both the things. 13,500. Since Welson's legal representative, we are going to pay him, I am going to write down under his heading. Okay, Welson's legal representative's heading. Then, so this amount I have to write down over here on the debit side of partner's capital account. Okay. After that, you have to find out the goodwill. Goodwill of the firm is is 36,000. So what you have to do is you have to take the death partner share. Now death partner share is 3. So what I am going to do is 36,000 multiplied by 3 divided by 12, which will give me 9,000. And this 9,000 you have to distribute it with the remaining partners. Okay, now here the remaining partner is Victor and Nelson. So with that I am going to distribute, and Victor and Nelson's ratio is 5 is to 4. 5 is to 4. So in this ratio you have to distribute. So you will get 5,000 and 4,000. So like this you have to do 9,000 multiplied by 5 divided by 9. Okay. So 9,000 multiplied by 5 divided by 9. This is for Victor, which will give you 5,000. And for Nelson, same thing you have to do. 9,000 multiplied by 4 divided by 9, which will give you 4,000. Okay. So this is with regards to their share of their share of goodwill. Then this you have to again transfer it on the debit side as Wilson's capital account, and under the proper heading of Victor and Nelson's you have to show. Okay. So this is with regards to this adjustment. We saw the adjustment of goodwill of the firm, then land and building. We also saw with regards to debtors, machinery, creditors. Creditors, they have told us that creditors valued at rupees 32,500, and in the trial balance creditors amount they have given as 27,500. So that difference you have to find out. 27,500 minus 32,500, which will give you 5,000. Okay, since the liability is increasing, it will come on debit side of revaluation account. Okay, so this is what with regards to the adjustment part. Now after the adjustment, the first step is you have to come back again to the revaluation account. You have to check the total of all the accounts. So here you have to check which side is heavier. So currently credit side is heavier, and now you have to find out the difference. So the difference what I am getting is this 12,000. So this amount, no, to partners capital account, this amount you have to transfer it to the credit side of partners capital account as the heading by revaluation account. Okay, so by revaluation I am going to show it as 5,000, 4,000 and 3,000 to all the partners, and this is being this amount, no, 12,000 we have distributed under this ratio, 5 is to 4 is to 3 ratio. Okay, then after this you have to check the total of all the 3 partners, and then you have to find out how much amount we are going to pay for the Wilson's executor account. So Wilson executor account we are going to pay 67,500. This is the difference what we got. This is the balancing figure what we got. Since Wilson is died, his balancing figure you have to show it separately, okay, and should not mix with the remaining partners balancing figure. So this is the remaining partners balancing figure. Then next they have told us to prepare loan account, okay, and the loan account to be prepared with the 3 equal annual installments with interest of 10% per annum. Okay, so executor's loan account. Now, whatever the difference I got over here, that is 67,500, that I have to transfer it with the this account, okay, loan account. On credit side, I am going to transfer. So whatever is getting debited, I am going to credit it. Okay, so 67,500, you have to put it under this head, executor's loan account. So it means that this loan I am going to, that particular company is going to pay with 3 equal annual installment. So the first installment they are going to pay with interest, okay, with interest they are paying. So you have to take the date of when he died. So he died on 1st July 2023. Since it is an annual installment, you have to take the full year, full 12 months you have to take. So June 2024 it will come to the next year. Then interest, how you are going to calculate? Interest they have given already as 10%. So on this 67,500, you have to find out 10% on this. Okay, so which will give you 6750. Then whenever we pay any loan, we paid with the installment. They told us to pay with the installment. So installment, you have to divide 67,500 divided by 3, you will get 22,500. So this is the installment amount which will be same. So if you see, this amount is same over here for the next 2 years, and the interest. So whenever you are paying this, you have to pay it with the interest. Okay, so that's why we got it as 29,250. Then you have to total both the side, and both the sides should be equal. So here I am getting 74,250. Then this minus 29,250, you will get 45,000. So this is the balancing figure. Okay, so if you see, this is the balancing figure, 45,000. So that balancing figure, whatever you are getting, that you have to transfer it to the next year. Okay, so again on this 45,000, you have to find out the 10% interest, which is 4,500, and on that you have to pay pay that interest along with the installment. Okay, which will give you 27,000. So if you add 27,000 plus 22,500, you will get 49,500. Here 49,500. Okay. So similarly, whatever the balancing figure you are getting, you have to carry it forward till the next 3 years, till the amount get 0. Okay. So here I am going to transfer it, and if you see, on both the side it is getting tallied, and here there is no balancing figure which is coming up. Okay. So till the amount get paid off, you have to make the installments. You have to make the accounts. Okay. So this is with regards to the executor's account. Okay, so this is how we prepare executor's loan account. So now we'll start with the MCQs of this chapter, and the first MCQ is, which of the following account is credited for an increase in the value of a building at the time of retirement of a partner? So at the time of retirement of the partner, we basically take revaluation account. We put that in the revaluation account. So here the options given are capital account, bank account, building account, or revaluation account. So the correct option is revaluation account. Next, Amit, Rohan and Vasu are partners sharing profits in the ratio of 3 is to 2 is to 1. Then, Rohan died on 30th June 2022. So, they have given the ratio as 3 is to 2 is to 1, and Rohan died on 30th June 2022. The profit of the firm was 60,000. So, the profit is 60,000. Okay. So, you have to find out Rohan's share of profit based on the previous year's profit. So 60,000 we have, and we have the ratio of the partner Amit, Rohan and Vasu. So what you have to do, since Rohan is dead, so you have to take 2 divided by 6. Rohan shares you have to take. Rohan ratio. Rohan ratio is 2 divided by 6 multiplied by the month. Now he died on 30th June. So you have to take 3 months. So from April onwards you have to count. April, May, June. So since he died on 30th June, full month you have to consider. So 3 divided by 12. So this will give you 5,000. Okay. So the correct option here is 5,000. Next. Next MCQ. Decrease in liability at the time of retirement of a partner is dash. So here the options given are debited to revaluation account, debited to profit and loss account, credited to revaluation account, or credited to profit and loss account. So the correct answer is credited to revaluation account. Okay. Next, at the time of retirement of a partner, profit on revaluation will be credited to. So the profit on revaluation, here options are given: capital account of the retiring partner, then capital account of all the partners in the old profit sharing ratio, then capital accounts of the remaining partner in their old profit sharing ratio, then capital account of the remaining partners in their new profit sharing ratio. So the correct option here is second, that is capital account of all the partners in the old profit sharing ratio. Okay, then next MCQ, gaining ratio means, here gaining ratio means here the options are given: old ratio minus new ratio minus old ratio minus sacrificing ratio, and new ratio minus sacrificing ratio. So the correct option is new ratio minus old ratio. Then gain ratio we find out with regards to retirement and death of a partner. Okay, so whenever a partner is dead or retired, the remaining partners, they get the profit out of it. So the how you calculate is new ratio minus old ratio. Yes. Then on the death, next MCQ, on the death of a partner, the amount due to him will be credited to. So whenever there is a death of a partner, whatever the amount is left, that we give to his executor's account. Okay. So here the options given are all partners capital account, remaining partners capital account, his executor's account, or government's revenue account. So the correct option here is his executor's account. Okay, so the next MCQ is, what is the formula to calculate gaining ratio? So here the options given are old ratio minus new ratio minus old ratio minus sacrificing ratio, new ratio minus sacrificing ratio. So the correct option here is new ratio minus old ratio. Okay, gain ratio basically we calculate whenever with regards to retirement and death of a partner. So whenever one partner retires or dies, we calculate the gain ratio for the remaining partners. Okay, so now we'll move to the next MCQ, that is, on the death of a partner, the amount due to him will be credited to, and the options given are all partners capital account, remaining partners capital account, his executor's account, or government's revenue account. So here the correct option is his executor's account. So whenever there is a death of a partner, his executor is paid with the amount. Okay, his executor, that amount is transferred to his executor's account. Okay, thank you for watching the video. Do like, share and subscribe.